Flip a stone. No. I said 2 against 2 as in 2 intermediates against 2 beginners. Actually, Fiona has been trading for quite some time.
I was born into it.
Ah.
I was born in that pepper.
Okay. So usually, what happens, you all know, usually we cover one topic, right? We cover one topic.
Okay.
And then the second thing is, then we would apply it, how I usually do my format. And then the third one is we got a Q&A. Yeah?
No, we need it maybe later.
So I think most of
Do
it
we need into that?
later on. So that's why I was saying the second. So we go through a topic and then we then apply in the markets and then we go through Q&A. So now today, usually I get the intermediates usually coming. So today we got 2 beginners. So I want to be careful of what we go through so that it's not too basic until Stephanie and Savio sleep.
Oh,
And then, or it's too advanced
for me.
that both of you go to sleep.
I can handle it. I don't mind it, to me, beginners, I refresh.
So I would like a suggestion from you all. On what would be a topic that today you would like to know more about? Who wants to start?
Tapering.
Tapering.
Yeah.
Excellent.
Can we do the testing on lift of early entry?
Oh, that'd be good. Yeah.
It
Okay.
can be too advanced or
No, I jump on the boat. Okay.
Let me think on it. You, Stephanie, what would you like to learn about?
I was just thinking about the trade I'm testing.
Okay.
For
PR release, right?
yeah,
Maybe.
That's not worth talking about it here. I can talk to you one to one. Yeah.
Yeah, maybe.
You want to ask some questions about that, is it?
no, I'm gonna add a parameter.
Oh, right. Okay.
I don't know if it's worth doing. But I think I just do it and see what happens.
It's okay. She's just talking alien language. We don't need to understand.
Okay.
Fiona, what do you want?
Okay, I want to for your train. For example, you start at 8 in the evening, and then how do you do, what to look at it, dinner or something,
Oh, my routine?
Yeah,
Okay, that's a good one.
and then
Okay.
also into what time you get up in the morning,
Oh,
if you want to do the European market.
Oh, that's
And
right.
what the real deal. Yeah,
Okay. Okay,
it's good for you, then
yeah, that's very good. Okay.
I haven't done, I haven't done still my first trade, even
You
in
haven't done
a
your first
demo account, so
Ah.
that's what I would like to implement, to
Okay.
start, boom.
That definitely we can all get done. You all have placed a lot of trades, right?
Yeah.
Fiona has as well, no? You've placed trades.
No, because since we started to do the course, I couldn't watch your recording. So only solved the program we solved last night. It took 4 hours with the people, sisters, the 2 ladies, they were helping me.
Oh, sisters, yeah,
But I
Joanna.
couldn't get in all the time.
Oh, gosh.
So they have to help me to click on
It's
the
okay
one.
now?
One said I have to come back to you. I said, what is the point? I keep them
Live work, the recording is a little bit tricky,
The WebEx?
but I think you need to have the Cisco application.
Yeah.
No, they have to do some adjustment on the application, the tools, and they have to, something on and off.
Every laptop
They have
is
to
a
do
bit
some work.
Very often.
No, you just sit there all night, you just get in, trying to get started all night, and they were so excited, and oh no, but, then I realized it wasn't working.
So PR rate, lift off early entry, routine, and yours is just
Oh,
placing a
that's
trade.
right. Yeah.
Okay, so we will cover all of that. As much as I'm not confused, anyone will be more. Okay, so I would love to take up this topic of lift off.
Actually,
Yes.
I know the topic change. It's still related to mine, but just on the trend.
On the trend,
Yeah.
the 6 types of trends.
No, just the particular, like on a variation file when it reverses.
Okay, yeah, no worries, yeah, we can look at that. Oh yeah, so it's good for you all now. You can look at it. So the point is, so you must know verify. So when we write down these things, so we got variation 5, we got lift off early entry, and then we got Fiona on routine, and then we got pillar on basically what's this?
First trade.
Placing a trade.
For example, say this, because one of our colleagues was subject to the, oh, my risk, I didn't have my risk radio right set up, because I want 100 or something, and he lost £50 instead of 50p.
Yeah.
So those things is.
That's good. The great thing over here is that lift off early entry and placing a trade. I can take a break because you two can help presenting that, right? On how to place a trade, so that I can keep you guys away. Variation 5 and routine, yes, I will go through. We will start off first with the lift off early entry. But first of all, before we go into the early entry, we would love to know, at least from the beginners, so as to make sure that you're all talking the same thing. Do you all understand the lift off clearly, easy?
I haven't brushed up, but I remember more or less.
Okay, so therefore you guys can guide me to coming up with the rules. So the first thing that we look at is what for the lift off.
It was about the trends.
Yeah, so how do we get the trend? Let's say we're going for long.
It was the 25th, is that one? Yes. So I think in the long.
Before we get on, so what I want Stephanie and Sabir to observe, see how I do the long with them. Then I want you all to come here and then question them about the short.
Okay.
Okay, awesome. Okay, so the long, how do we determine the trend? Pillar?
Yeah,
Pillar.
like a column.
Ah,
Visually.
Pillars. Pillar.
Your pillar like this.
There's or like the Solomonic one. No, I think what I don't remember is the 20 has to be underneath or below.
How will you feel, Dina?
But certainly it's the 20. The 20 is the only one we look at, and the other two has to be below or above.
Above.
What is going to be above? 20 is going to be above what?
Yeah.
It's going to be above
50 and 100.
50 and?
And 80. 100.
50 and 100, right? Huh? So the 20 is going to be above the 50 and 100. 20 is going to be above 50 and 100. Okay? So that's the first rule, to determine the direction, right? So we only go long only when this 20 is above the 50 and 100. Does it matter in which order it is in?
No.
No. Huh? So the 100 can be here or the 50 can be here, no?
Yes, that's what I mean.
Okay, so that's good. So we got that. 20 is above the 50 and 100. What's the next thing we need to look for?
Then do we need the close price to be below the 20?
Yeah, very good. What is going to close below? What is
Below the 20.
Yeah, what is going to close? The price, right?
Oh, yes,
So
yes.
price got to close below this. So price got to close below. So that would look something like this. So, close below, right? Yeah, close below. Got it?
Yeah.
You understand? Okay, brilliant. Let's go to close below. That's called the what bar? It's called what?
It's not entry level.
What's the name of this bar called? Siddha bar.
Set up bar.
Siddha bar, that's right. Then the next one that we are looking at is
Confirmation bar.
confirmation bar, right? And that is got to, what is it got to do?
Go above
Go above. What go above?
the the close price goes above.
That's right, it's got to close above. And that would be your confirmation. And that is it, we got all wrong there. But the difference between this and this one can be how many bars? Does it need to close above immediately? Or
I think it can be 10 bucks.
10 bars, maximum of 10 bars. Including the setup bar as bar number. So basically, between, basically we need to have 9 bars basically.
Oh, this is
So by the
price.
10th bar, we need to get it to close above. Understand? Yeah. Yeah. So 9 bars in between. And then that's pretty much it. After we get the confirmation bar, where do we put the pending order, the entry and the stop loss? Yeah. Where do we put the entry and stop loss?
The one other.
Yeah,
It was
okay.
some pips up or down or something.
Yeah, so below the low of the bar, we put the stop loss, right? Yeah, 3 pips below it, is that what we said? Or 1 pip right in between new groups. Then the entry would be 3 pips up above that. Okay?
So the day we see the confirmation bar, that is gonna be our guidance to do the stop bar.
The entry and the stop loss.
So we'll do the entry and the stop based on the confirmation bar.
Very good.
You said it's 9 bars, that means we have to wait for 9 days.
Maximum. But it can happen anytime before that, right? Yeah, it can happen in 3 days or 2 days. Yeah, maximum, that's very good.
Okay.
Very
It's
good.
9 bar.
Anything else? Entry, stop loss, and then yo,
Okay.
yeah.
For copy. What do you need to put so that they get the copy?
I'm sorry, what are you talking about?
So you got your entry, you got your stop loss now.
Mm.
What else you need? The last one is your
Target.
target. That's right. That's like what Stephanie said. No? The profit, right? Target. Huh?
I cannot say the word.
Okay, that's good.
There's only one sweet one.
And the target has got to be how many
Can you
times?
remove this one?
Yes, of course.
Can you see?
And the target has got to be 2, right? What is it? You know, remember? He's giving you a clue. You know?
2.1, something like that.
2,
2 to 1 ratio.
2 to 1, right? Yeah. So if this entry to stop loss is 100 pips, how much should the target be? Should be 200 pips will be there. It's good. 2 to 1, huh? So in the beginning, you just keep it simple. Okay, you just do 200 pips. Okay. Finally, let's say the next day you get triggered into the trade, and it starts going in your favor. Your initial stop loss is all the way here. What are you going to do now? You're going to. Are you still going to keep your initial stop loss as where it is, or you're going to? You can do. move your stop loss, right? What is the name? It's called
Scary.
trailing your stop loss, right? Huh? Trailing your
Yes.
stop loss. And where do you trail your stop loss?
So there is, we are losing money and we keep that.
We've not. What do you all think? You're losing money or what? That's an interesting question.
We say,
Initial stop loss is here, right?
yes.
Currently the price is here, no? Am I right? Huh? Currently price is here. This is today, let's say. Entry was here from the high of this block. Are we in profit or not?
Trend, a trend.
Yeah, are we in profit or not? So entry, let's say, was 1.2510. Entry,
Is that over there?
yes, of course. It's not very long.
That's really annoying.
Can you say that?
You can see, right?
Yeah.
Entry was 1.2510, no? Right? Currently the price is 1.2610, let's say, yeah. Am I in profit or not here?
You should be, because it's a trend and the price is.
And we're going long, no?
Yeah.
Right? How many pips are we in profit? Fina? 100 pips. Got that, yeah? 2610 minus 2510, 100 pips. And at 10 pounds a point, how much would that be? Huh? 1,000 pounds, right? 1,000 pounds. So you're 1,000 pounds in profit at the moment, no? Right? Now, but where is your initial stop loss?
Wall Street pips and then below the
Yeah, below.
closing price of the information bar.
Yeah, below the low of the confirmation, not below the price, below the low of the confirmation, low, no? Right? Because you see this the bar, it's below the low, not here.
And the same goes for the price when we do the price. So we take into account the lowest price and the highest price.
Not price, no, the low of the bar. Don't call it price, the low of the bar.
The lower the bar
Ah.
and the higher the bar also.
For the entry, yeah.
Yes,
Yes.
it's the highest value, not the closing for.
No.
the highest.
In this strategy, yeah, we're going to do entry minus stop loss.
Thank you.
Your question is actually will come down the early entry, yes. I think there's someone which is going on. Yeah, you got that, yeah?
Yeah, you
Does everyone get that? So, entry minus the stop loss. Okay. We're not taking the closing price, yeah? Huh?
lowest price. Thank you.
Okay, so we got this and this. So, anyway, so we got a range. And that would be your 100 pips of risk, and then your target is 200 pips. Got that. So currently right now 1.2610. Are we making a profit? Yes, you all say. At 10 pounds a point, that would be 1,000 pounds. But your initial stop loss is still all the way here. Yeah? Maybe you should check. So that's your initial stop loss is still here. So is that a good thing or a bad thing? Yeah, this is something. Yeah, so the stop loss being all the way there, is it a good thing or a bad thing? Yes, we have to move because what if you don't move? What happens? Why?
In case you bounce back.
In case what?
Down. Bounce back.
Yeah, exactly. And then if you bounce back, how much will you lose?
You lose less.
If we are going upwards, why we lose money?
That's a good point, isn't it? If you're going upwards, why would you lose money? In fact, before we come to that, are we really making any money here or not really? You say yes. You know, what do you think? You making money here?
In principle, it looks like.
Okay, how are you, Stephanie? What do you think? Are you making money yet? No. Stephanie says no. You two say yes. Why Stephanie says no?
Because it's not in my bank account.
Exactly, right?
What?
Okay, now let me ask you something. You bought your property at £200,000, okay? Right. That was 2 years ago. You bought it at £200,000, right? Right now, the property is valued at £300,000, okay? But you haven't sold it yet. Yeah? You're still living in that property, but you hear from all your neighbors it's now worth £300,000. Have you made any profit yet or not?
I haven't realized.
Thank you. Right. So you haven't made any money yet. Am I right or not? Because this money is on your bank account.
I understand.
Yeah? It's just running profit and it's paper profit,
It's
right?
a better problem.
You got that, Pima?
Yeah.
Until it hits the target, or it hits the stop loss. That's the only way you're going to exit, and that's the only way that you're going to make a profit or you're going to make a loss. So in this example, really,
And here when the strategy and the psychology plays, like I'm going to stop here, I'm gonna wait till my target.
exactly, that's right. So currently right now, even though the account, the running profit is showing you £1,000 profit, but you haven't realized it yet because you're not hit the target or the stop loss. So right now, technically, where the initial stop loss is, it's not good for us because if it reverses like what Fiona says now, we can get a total loss, or if it keeps going up, we can get a total profit. But there's another way which we can minimize the risk, but still keep the upside on the target, which is what we do. We do trailing stop loss. So instead of keeping it all the way, even though we got this amount running, what we then do is we move the stop loss behind this moving average. Understand? As soon as the gap between the low of the bar and the moving average is how many pips?
Good question. Remember that, I don't remember.
Fiona? When you start moving the stop loss, initial stop loss behind the moving average, only when the difference between the low of the bar and the moving average is how many pips? Stephanie?
That one I missed. I just remember trade behind the moving average.
Okay. Sasa? How many?
101.
20 pips. 20 pips.
The trailing moving average, trailing your
Trailing stop loss. That's right. Once the low of the bar and the moving average.
So when the low of the bar goes 20 pips below.
Not 20 pips, above, it's above the 20.
So before,
Going long, yeah.
so going on and before reaching, it's a difference of 20 pips before going to the blue line.
Before going to the blue line.
To the
No,
20.
no, it's just going up, right? It's going up, no?
Yes.
But the low of that bar and this 20, there's a gap of 20 pips, that's when we start moving the stop loss, the initial stop loss behind the moving average.
Yes.
Yeah.
And those 20 pips are the distance between the lowest
Of the current bar and the moving average.
till the line itself.
Exactly. But you can get the figure of the moving average from the software.
Yeah, just to understand.
Okay.
So,
The 20 pip would be next to the 20 moving average or below.
Say that again, the 20.
Yeah.
Ah.
You have to touch the 20 moving average.
The 20 stop loss.
20 pip.
20 pips?
Yeah.
No, you just basically you're measuring the low and the value of this 20 moving average, which the software will
question for you.
do.
We said that the confirmation bar we have 10 days to have it. Yeah, and then what about on the 5th day we have our confirmation bar, we put the order,
Very good.
So then, how many days we have it to hit our target or to get to the losses? That depends.
Exactly. So you
5 days for 10.
exactly.
That's when you said on the let's be patient with this.
Yeah,
Right, okay.
exactly. That's what we mean.
Okay, okay.
Fiona, how about you? You okay so far? Okay. Sasa?
Okay. Before.
So now, I've completed almost everything about the long part of liftoff. Now I come to the fun part. The fun part is, yes.
Why is it we are allowed to move the stop loss and we are not allowed to move the target? Can we move it? Or
You can move your target as well.
can we?
Yeah, but in the beginning, I would suggest that for anybody doing any strategy in the beginning, keep it simple, and also your goal in the beginning is very consistent execution. Like, get at least 6 months worth of consistent execution first, then we can start talking about the rest. Okay? Because you're just training your mind, that's all. Haven't you seen actually in our whole life, this mind of ours is very used to always changing things, always, even your discipline, even your waking up patterns, even like drinking water, even having food, good healthy food, you will only practice it for 2-3 days and then we'll go back to junking. Have you seen the mind? It's very hard to get into an absolute routine of doing this at this exact time every single day and then continue for the entire life. There's very few people in this world who does that, right? Yeah? Why? Why does that happen? Because our emotions already carried away. There's so many times when I've gone on like dieting regimes or healthy lifestyle, where I've told myself I'm not going to eat crisps for the next 2 weeks, and guess what? I go into a supermarket, see all this Thai sweet chili crisps for good offers as well, and I start just grabbing it and I screw that healthy lifestyle, just take that out, right? Because the emotions get played. But then if you see all those big athletes and the top performing ones, so disciplined, right? Every day they got a certain routine. They'd be up at about 5 a.m., they'd go for a 2.4 or 5 kilometer run, and then they'd come back. Especially in the army, we had a very, very systematic regime, very, very disciplined. Yeah, you cannot go against that. So the same thing here, that's what we are looking to ingrain first, because professional traders, what's the main difference between professional traders and amateurs? What is it? Okay, consistency, that's the main point. I know through all the numerous testing that I've done, the stats usually prove themselves to be profitable only one thing, consistency. It doesn't matter what rule you put, if you keep on applying consistently, in the long run it balances itself out. Yeah? That's the most important. So therefore the consistency, quantify, that blows your mind. Okay, so that's good. So any last questions, please? I've answered your question about moving targets. So in the beginning, just concentrate on consistency. Just do it in a certain way, and then we can compare it. In the advanced ones, yes, we have something called adaptable targets, but we don't just move them just because I feel like it, because I think like it's going to go more. We do it based on adaptable targets, so based on market conditions and the momentum. There's always a reason, there's always quantification.
Or we can get out and then get in.
You can do a lot of things as long as you do it consistently and you want to plan around it.
Just that when you drive a car, you want to know how you can turn left, turn right.
But similarly, right? Yeah, but you can't do it on the first day you get into the car. No, right? Okay. Anything else? Okay, good. So now come to the fun part. So when I take a seat, and then you guys can come and present. And you got to talk about the shop. So who wants to come present? Stephanie or Sabir? Sabir likes it. You can have another chance. Stephanie?
Oh, not the price run.
Oh, you want to have fun with the price run. Okay, that's good. Yeah.
I don't like it.
Oh, I heard you like it.
I like it of the price run.
Okay, so you will short. Then
I thought you were presenting. You were just asking questions.
have fun.
Okay, so on the short, Tino has already covered that on the long lift off. So what we're going to do, we're going to do that on the short lift off. So how we're going to enter and why is the reason. So what is the first thing we look for when we enter in short lift off? So remember, it's the same thing going, the same rule going long, but this time we're going short. So what's the first thing we're looking for?
That the 50 and the 100 bar is above the 50.
Sorry, say again?
That the 50 and 100, independently of the order, goes above the 20 bar.
Goes above, so which?
No, below.
20 below.
The 20 goes below,
20 is below, so this, which one is 20 here?
Should be the good one.
Okay, 20 E and A, and this one?
Doesn't matter, it could be 50, it could be 100.
Yeah, okay. Let's say 50. 50,
Yeah.
and this one 100, right?
Yeah.
Everyone understand? Yours? Okay. So we're going short now.
Yeah.
So first one is the moving average.
Yeah.
And second one, what are we looking for now? Yours? What do we look for?
Salama.
Setup bar. So setup bar. So this is a setup bar. And next, so the setup bar, how should it, where should it close? Below 50. No, we're going short. We're going short.
Should
Set them up.
be the closing price above the 20.
Above the 20, correct. So this is setup bar, and the setup bar would be normally green because it's going up. Now we've got moving average. 20 is below 50 and 100. We've got one setup bar. So what's the next thing we're looking for now?
For our confirmation bar.
Confirmation bar, yeah. Let's say we have a confirmation bar here, and where would we put our entry and stop loss?
So the close price will be below the 20 then, yeah?
Okay, we've got a setup bar here, and this is a confirmation bar. It's closed below
It's
20 MA already. So now where would we put our order and stop loss?
So I think could be, is it,
We're going short now. We
you
want
want to go short, the lowest point of the confirmation bar,
yes,
right?
yes. What is it? Stop loss or entry?
Entry.
Good.
And then it must be some pips, but then 5.
Entry. No, it's -1. Remember when we go short,
Yeah.
-1.
Ah,
When we go long, then it's +3. Do you know why we do that? Because of spread. Spread. So we always count the spread. So, and the stop loss, how many pips? Right, 3 pips stop loss. So we've got entry here, stop loss here, and now the next thing, what do we have to do? Can we place the trade now? There's something missing here. We've got entry. We place our stop loss. There's something missing.
the target, no?
Target, yes. So that's the target here. And how do we calculate the target?
The ratio.
It's the same formula that Thiru done. So we're doing the same formula, but we're going short. So how do we do that?
It's not 2, 1 again?
2 to 1, yes. So you do the same thing. You calculate the let's say 100 pips you're risking here. You multiply by 2, you get 200, and then you take this price, you minus it, you get this.
Isn't it entry minus stop loss?
Entry
Minus the
minus stop loss, then you get
100.
100, and then 100 multiplied by 2, you get 200 pips, and then you take this entry, you minus this because you're going short now. So you can't plus because you take, okay, for instance, this entry is 1.300, yeah? So you take this, you minus 200. You're not plus because you're going short. The target would be how much? 100. Yeah, because we want the price to go down. Right? Okay. Any question on that?
Oh, trading stop loss.
Yeah, I'll go with that now. Any question on that? Entry, stop loss, and target. Any question? Okay. Mr. Hassan? Okay. Fiona? Okay. Okay, now we've got our entry, stop loss here. We've got already target here. And the next day, the trade is triggered. So what do we do now? We still in the trade, so what do we do? What rule? Yeah, so what do we do now?
The trading in the stock
Yes, so how do we check this trading stocks?
is also 20 pips to reach the 20 ahead.
Yes. So it's the same thing when we go long, we check for the high, when we go long is the low of the bar, but now we're going short is the high of the bar between the 20 moving average. If it is 20 pips or more than 20, then we would trade our stop loss pips above the 20 moving average. It's the same thing we did on the long, but now we're doing on the short. So now we did it here. We're going to do it. Once we trade the stop loss, we continue doing it until we hit our target or we hit our stop loss. Any question?
Sabir is very kind to you. Usually I ask a lot of questions, but he likes to tell you all the answers.
Is that Hassan? You okay? Any question? Philip?
Is it trade? You just trade every 20?
No, every 20. No. Once it's been 20 or plus 20, once we trade it, we're going to trade it every day, regardless it's here, we're going to trade it up. Is that right, Philip?
What if the distance between the close and the moving average is more than 50 pips?
Say it again, sir.
If
The high.
the distance between the candle and between the bar and the moving average is more than.
You mean the high or the close?
Oh yeah, sorry, the high.
The high is 50 pips.
Yeah, I said it's getting farther and farther away.
Yeah, that's good. We trade it. We still trade it. So it's better if it's getting further away. That means it's going down with our target.
Yeah. I was just thinking if it then reverses, then you lose that much. You potentially lose that much profit.
Yeah, but then we follow the plan. Because we don't know whether it's going to hit our target or hit our stop loss. So we always
That's a good question, isn't it? Usually, people usually ask that now.
Sometimes there's a sharp decline.
So the worst thing that can happen, I mean, this has happened in the trading room before as well, right? So basically, bar goes all the way down.
So you get the target and then shoot.
Yeah, so it's like 5 pips away from target, okay? Just like what then Stephanie has said, and you get an opportunity to trade a stop loss as well. Right? It's got 20 pips above the gap. Then Stephanie is thinking, hey, hang on a minute. It's gone all the way down and I'm only trading it just a little bit from my initial stop loss. Shall I maybe be a bit sneaky and do something different? So what should the answer be?
You are professional.
You know, in my scripture, I've put a rule that if it is between like 20 pips away from the target, I can close the trade if I think that the trade is going to reverse. But that's my rule.
Okay. So at least you got a rule, but what should the final decision be made on? Based on what? Is it based on the scripture and rules? Based on what?
In our strategy.
Plan. Our plan.
House plan. Yeah. But why on the? Is it just on the plan? Just on the plan that you write some rules?
Consistency.
Is it based on consistency?
Standard.
Discipline.
Let me ask you something. Someone wants to lose some weight, okay? So goes on this health regime, right? The guy tells him, okay, do this, that. Okay? In scenario one, the guy who tells you that, tells you follow that, but when you look at him, he's really, really big size guy, right? He's really fat, yeah? So you're looking at the thing that he told you, and you're looking at him. I don't believe this. Throw it away, right? Because the guy who's talking about it is first of all not living it, no results, right? No congruency. Scenario two, you sit in front of a guy, very strong build, 6 packs, yeah? And then he gives you that regime that you got to do, eat this, eat that, and then follow this exercise regime. And I can tell you, I have followed this for the last 1 year, and this is what you're seeing in front of you. Who would you believe? Right? Now, why do you believe the second guy said the first? Both of them had a plan.
Result.
Results. And his results come out of just in scenario two, the guy with 6 pack. He said results in 1 day or 1 year. How many of you know Brian Tracy? Yeah.
Beginning.
Yeah, one of the biggest business coaches, right? He's coming in November, by the way. Right. Actually, today, funny enough, I spoke to the guys who organized the event. They got an amazing, I struck an amazing deal for all our clients. So I'll send a thing, and you can have the table as well, but I'll send it out, I'll talk to you. Remind me to talk to you all about that later on. But what Brian Tracy said is, he said, one of the biggest business coaches in the world, a phenomenal speaker, on everything, awesome guy. He says, first of all, understand these 2 words. He says, nothing works. Even the biggest of ideas and discoveries, he says, 2 words, nothing works. And then the mind goes like, sure enough, it doesn't make sense. Then he carries on to explain, he says, nothing works as long as you only do it for only 1 day, for 2 days. You don't keep doing it enough times, he's right, nothing works. I can give you the best of anything with you, I can give you the best of weight loss programs. You just do it for 1 day, half a day. Then you suddenly eat all the scripts and all that. What's the point? It's not going to work. Nothing works. So that's the point. The mind needs to be trained to see the longer term results. Right? So your mind always going on thinking that, hang on a minute, this trade, 50 pips away, shall I start deviating on the plan? But it's one trade.
Then also is, okay, you have a limit, and just it's a strategy and a structure. By going, today's 50 pips, it's 51, why not? Then you break your own rhythm.
Exactly.
And you need to not think into a trade when it's shorted, and you can move to the other one. I think it's also allow you to have this discipline, allow you to have the mind free to do the things consistently and do 15 operations instead of one, doubting yourself all the time.
So the decision making really comes down to the answer of, in the long term, if I keep doing that and changing it, how is that going to affect my results in the long term? It's the same thing, anything like in relationships and wealth and health. Exactly the same thing. So always thinking about the long term. Long term, to train your mind thinking in long term is dependent on 2 factors. The 2 factors will be your knowledge first. Knowledge, conviction. Conviction of knowledge only can be done from 2 things only. Experiences from the past. Experiences from the past. I'm just going to write them. or experiences in the present. That's how intellectual conviction is formed. Basically, what those experiences are doing is they're imprinting in you, right? Because if I keep following this exact same plan again and again and again, or a health regime, or a relationship plan, if I keep getting the same results, that means it's imprinting in me that works. You go to a marathon, you participate in the Olympics, you win the first time, it's going to build more confidence or less confidence? More confidence. You go the second time, you win again, it's going to build more confidence or low confidence? More of the same thing. You get getting the same result, you do the same old thing again and again, and you get consistent result for 2 years. You're going to get more confident or less confident? Same thing. So therefore, then the mind now gets into the habit of not taking any more one trade altogether anymore. Because it starts to know, hey, hang on a minute, this is just one trade. And what does one trade mean in the long term anyway, the long term results? It starts thinking that it's a consistent plan towards a longer statistical pool, and that intellectual conviction is formed because past imprint, just like the marathon runner, because of his past winnings, but then the present winnings as well. So the knowledge was rebuilt and the emotions must be stable. The same universal concept for any kind of success in any field in your life. Knowledge must be strong, emotions must be stable. Emotions become haywire, you cannot control anything in your life as well as trading. Okay, so in technical terms, everybody understands? And everybody also understands the question that Stephanie asked as well, huh? That whether we can move it when it's 50 pips away, or should we move it in a different way or not? Huh? The answer comes down to the longer term perspective and how your results change. Then test it. Then you can, if you do adaptable, then you do adaptable as well. But whatever you do, remember that the mind brings conviction based on past and then present. So even if you Sabir has written down that rule, you need to have built the intellectual conviction. You need to sit in front of you saying that this 100 tricks that I've tested, it will produce this result. If this 100 tricks, if I do it that way, it will produce the other results.
I trade longer, like weekly time frame and also this.
But do you have results to build your conviction?
Yeah. No, result, what do you mean by result? Or by how testing?
Yeah, by testing or by forward testing. Back testing or forward testing, I don't know. But it needs to be a good sample size.
Okay.
You have that?
Then not be.
You need to, because all the intellectual conviction is not there, it's missing. The fear was not creep in. Okay, so we know all this. Any questions on the basics? Since we know this, we can now go into a little bit just more advanced concept, huh? Which is what Sabir was asking about, right? About early entry.
Can you continue the last one we did on the minor information?
Yeah, I'll go through that.
Yeah.
Okay, so we got long. Now we got the 20. We got the 50. And we got 100. Huh? So what we will do here? We go long or short? Sasa?
Wrong.
Long, very good. So we go long. 20 is about 50 and 100. We look for a close below. Is your, what bar is that? So, we'll have a bit of help from Stephanie. And this one here? Sasan, what is this called?
Confirmation.
Confirmation, sir. Close up, huh? Now, this is a typical lift-off trade, no? How about early entry? Early entry means entry more earlier than him. Now, usually in the lift-off, what we usually do, we enter at the high of the bar, no? A simple way to early entry is what? What can you all think about creatively?
Early entry is minor confirmation.
Okay? And where would that be here?
No, here, maybe close of the setup bar.
Close to the setup bar over here.
Yes, but there's no, it's very aggressive.
So that's not minor confirmation, is it?
No, it's very aggressive.
So it's aggressive.
Maybe
Could you invent a rule like if the closed bar is, I don't know, 20 pips or whatever pips, it's gonna mean that's gonna get go up?
Very good. So this close here, above the 20.
Yeah, you can invent something like that.
That's very good. So you can have that. That's also can be part of early entry. But basically, that is you're looking at minor confirmation. Minor confirmation won't come under that. This is basically a major confirmation. So major confirmation, you're saying 20 pips close above the 20, yeah?
Yes.
Right. Then you will enter on the close. But basically you're entering earlier rather than putting an entry on the high of the bar. So if you look at this bar here, this one I zoom in. First entry, normal entry is on the high of the bar, am I right? The lift off, yeah, high. Now, I said what we are going to look at now, the close, as long as it's higher than the 20 by 20 pips, then we enter straight. So the difference between the close and here, we enter by 20 pips. Then we enter. A very simple one that we can, so this is the second type of entry, right? On a bit of a major confirmation. Actually, major confirmation actually can be aggressive and timing. Actually, I would call this minor resolution. So we call it minor. So the major would be the high. Now, that's the second type of minor entry, but another one which you can do simply is as long as it closes above the 20, I will enter. I won't wait for the high to be taken out. You get what I mean? Everybody get that? Not really. So we got three types so far, no? One is the normal one where we enter the high of the confirmation bar. The second one is, just what Pilar suggested, is basically the close is higher than the 20 by 20 pips at least. Right? The third one is irrespective where it closes, as long as it closes above the 20, I will enter.
enter live.
Enter live. Closes above the 20.
But it's major. As long as is it minor or major? Still major, isn't it?
Yeah, I think more or less you consider as we can overlap though. I'll explain why it overlap. Most of this will be basically will come under major, but there'll be a bit of overlap between the minor and the major. Now another one which is much more earlier, and I'll stop at that. I'll not go through any more further than that. Which is you have the 20 here, and now it's all the way it's closing below, right? It's dipping and dipping, A lot of selling coming in. As soon as I get the first green bar, yeah? First green bar, I need some kind of buying pressure. First green bar coming in, and that is it. I'm in the trade on the close. Okay?
Then we enter live.
And then we enter line. So now, actually, what I've explained over here, we got 4 types already now. No? What are the 4 types now we got?
4 types, right?
Okay. Entry based on minor confirmation. What are the 4 types? What's the first one?
Aggressive.
No, the first one.
Oh, sorry.
Of minor,
Major and minor.
Yeah, but basically in these 4 types of entry I just described, what's the first type of entry? It is on the high of the?
High, that's major.
On the high of the confirmation bar, right? Yeah, that's the first one. So on the high, so the high.
High is not part of the high, yeah.
What's the second one? Is what people say. What's that?
That's minor and
But now the best on
close
the close.
about 20.
On the close, right? As long as the close is above the 20 by 20 pips. No. That's the second. Then the third, what did I talk about?
That's a
First green bar.
minor confirmation, which is the green bar. This is first green bar close.
Yeah,
That's another, yes, we're close as long as above.
that's a good one. Yeah,
But
that's
it's
the third one, right? Because the third one, all it says is that as long as the bond closes above the 20, don't care whether it's 50 pips, 10 pips, or whatever,
And the close.
we enter on the close.
Okay, this is, okay.
Yeah?
Okay.
What's the difference between second one and third one? Second one is,
Second one is the close has got to be at least 20 pips away from the 20.
oh, right, okay.
Yeah.
And the third one is, there is no, just above 20.
That's right. And then the fourth one is what?
First green.
First green bar. That's right.
Yeah, oh, that's the first green bar.
And then the first green bar.
Even,
That is it.
even below 20 close.
That's right. Doesn't matter.
Alright.
As long as you get the first green bar. Sometimes this green bar can also be the same as number 3 as well, isn't it? Right?
Yeah.
Overlap could happen. No?
Three and four can same.
Then what you'll then do, then you all test for each of these entries and then compare the results.
Wow.
Yeah. So that is the DB Elite video that I just done. So you have seen that. If the guys who joined new wouldn't have got it, but I think I'll send it again.
Can you do something like, put, let's say 4 different 10 pounds and see what happens? That's a way to test it, or?
You back test it basically. You go to history and you test historical. Yeah. So I know Stephanie is doing a lot, isn't it? Right now?
I just finished.
So she's testing a lot of variations with this. Not with this, but with the PRB. And I would love to do some surveys. I know we got to get some time, isn't it?
Yeah. You know, I've done a bit of, not testing, I was checking that bit of testing. On the full one, this one, it's a weekly, because I do,
Time frame already.
time frame for it.
Yeah.
If the weekly touches the 20 EMA and we got this green bar on the daily
Yeah.
chart,
Hmm.
it's a very high chance it's going to go up.
If the weekly what?
It's a weekly, it's coming down, it's an uptrend, it's an uptrend, and it touches the 20 EMA on weekly.
Which
And then-
touches? What touches?
The seller bar
Oh, the seller bar?
touches the 20 EMA going up, it's going up again,
Uh-huh.
and then we get a,
No, but how does the weekly look like? Tell me how the weekly looks like.
okay, the weekly look like, it's going up, it's going upward, it's
The
done,
price is going up or the moving average?
so the price going up, moving average,
Yeah, so it's
and
going
it's
up.
done at a high already,
Yeah.
and then
And
it's
So weekly is an uptrend or what?
up,
Uptrend, yeah.
it's retracing, it's coming, the price is coming to touch the 20 EMA.
So it's coming down, right?
It's coming down to the EMA. 20
So like this 20 say, yeah.
Yes. So
But
that's one,
has it gone through the 20 or not?
no, one is touches or close below.
Or close below 20 as well?
Oh, no, maybe just touch the 20 EMA.
Something like this, yeah.
Yeah, just touch the 20 EMA.
Right.
And then we have a green
Right. Yeah. Okay.
on the daily chart.
Okay.
So there's a high chance we get a really up momentum.
I think times. Have you seen that? Let's say if this low goes through it,
Yeah.
but it closes above here on weekly.
Yeah.
And this is a green bar.
Yeah.
Does it carry on going up as well?
Then it's a high chance it goes up.
Okay, fair enough. Yeah, that makes sense. So we increase the quality by looking.
We put in the rules as well. Do we have the price have to do that?
Oh yes, of course.
We
Yeah.
can do.
You got to add on. Basically, you see, at the end of the day, why do we add these rules for what?
More.
Okay, you see, think about it. Yeah, I can also enter like this, isn't it? I don't even wait for the green bar. I just enter on the red as it's falling. Why do we then add all these rules? Why?
To protect ourselves.
Why? Protect yourself
More
from?
chance. More chance.
Uh-huh.
So we want to take a good trade.
Okay, what else?
To give us a structure, otherwise you're just doing things loose, so you don't know what to do.
You don't want to lose.
No. If you have a structure and a code, you know what you're doing, but and as you say, build up confidence.
Yeah.
If you do things in a loose way, you don't know what you're doing.
Okay, that's what else? Why do we need all these additional parameters? Why can't we just enter aggressors for
With high chance.
high chance? Yeah, okay. What else?
You can measure your performance.
Discipline.
You can measure
You can measure the
Confidence.
results.
more confidence. That's true. Because sometimes most people really will be scared to enter something everybody's selling, no? Because the drop is so big, right? Imagine if you had. Think about this psychologically. I mean, this has happened to me so many times, especially the first 1 year, 1.5 years that I was trading. If you go a 20 like this, 20 moving average like that, go down. Think about this. So you got something like that here, 20. You got price going up. Yeah. Then it starts to come down a bit, no? Yeah. Come down a bit. Right? Then suddenly on third day it does this. Okay? Would you be confident to enter here?
No.
Would you be confident on this to enter on this part, to enter go wrong? It's a 500 pip drop, let's say.
No.
Yeah,
You'd be
I
confident.
will,
Okay, that's good. You?
I do sometimes.
If I have my method, yes.
Really good. Yeah, if you have your method, then it's right. But if you have your method with what?
Conviction.
And the convictions goes on?
Result.
Results. Results at least from the past or from present or forward testing. So that's what you need to do. So it's such a big drop. Of course, most of you will not be convinced to enter this trade. But would you have a bit more confidence if it starts to do this? And then what's the concept? Usually we add all these parameters only to act as a filtering mechanism, filter. To filter what? Filter the noise. Noise of losses. Because if I keep entering on trades like that, let's say on here, and let's say that gives me, let's say, 5 losses of 1% each. Now that is minus 5% drawdown. That's a huge drawdown. And then you get what happens on the 6th trade you want to put. You will get
More.
huh?
Scared.
Scared, right? Fear creeps. Fear creeps means cannot take action. Why not? So, to prevent all these big loss clusters, we add some filters. Filters like, okay, when it does 3 bars in a row like that and weekly is also downtrend, I am not going to take that trade. And then you test that. And when you test that, if this loss cluster starts to reduce to minus 2%, you know that filter mechanism is working. But then yet again, we can test thousands of filter mechanisms. Then how do we then narrow it down?
Like what we're doing now, we are choosing is it weekly then that or
But choosing based on what? I can choose so many different permutations, no?
On the shorts.
consistent
On the shorts.
On the shorts.
On the shorts. If you have
result.
this.
Or result, okay?
Yes.
Okay, what is it? But to get the result, you must test different permutations, right? So how do I narrow down the permutation? So for example, what's it going to be? So now start now testing different things, and there's so many things you can test, no? So then what you do, then immediately then today for the next 6 months you say, okay, I'm going to stop eating crisps. That's all you stop, but everything else you carry on. Then you start looking at after 6 months, hey, still not losing weight. Why? Right? then you test another one. Then you say, okay, I'm going to start eating crisps. Maybe I'll stop eating after 10 p.m. Then also not no results. Then what you then do? Okay, so maybe then what I'm going to do is maybe I am just going to wake up at 8 a.m. every day. Let's see if that helps or not. So millions of permutations, right? You can do. So then, how would you reduce those permutations to get your results?
Blood test.
Yeah.
How to reduce?
Those millions of permutations you can test.
Okay.
And maybe only test only a few only. Because you can test thousands of things, no, like stop eating crisps or sleeping earlier or this. But then how would I narrow them down?
Maybe which one has worked for you best?
From past?
From the past, yeah.
What else?
You can categorize them.
Okay?
For example, you can put all the carbohydrates in a place, all the, I suppose is the strategies.
Okay, that's good. But why are you doing all that? Based on
Consistent.
On your previous experience and your
previous experiences that gives you
Conviction.
They can compare.
okay, compare, yeah. But the real question here is how do I reduce those permutations? Because there's so many tests. It's the same thing in a scientific lab as well. Whenever you're getting that pharmaceutical pill out into the world, you know, how do I reduce those permutations and say, you know what, let's stop that enzyme and we'll get the result. Because there's millions of enzymes within us, I can stop one by one and it will take forever.
You've been adding the knowledge to somebody else.
Knowledge, you see, knowledge is critical, but knowledge will give you what? This critical word, which is market dynamics, right? Which is concept. Knowledge which will give you concept. Now, just like Pila said, based on weight loss, we know that one of the simple concepts is what? That the amount of energy output must outweigh the energy input, right? So you must expend more energy than you expend, than you put in, right? So if I put in, let's say, 1,500 calories, right, of food, to lose weight, I must expend more than 1,500 or less? More. Now you got a concept. That model framework is that you must work more than what you put inside. So then, based on that concept, now you can reduce the permutations already. Then you can now ask yourself, will sleeping lesser hours help with that lesser calorie burn, more calories burn? Will stopping eating crisps help with more calories burn? Will waking up at a certain time every day help with that, more calories burn? Then it's not really, oh, this one doesn't make sense. Okay, no. Right?
I did research
Yeah.
for the moon.
Oh, there you go.
Research of the moon. If you eat anything from new moon to full moon, you are likely to gain weight on.
Okay.
So if you eat something you want to lose weight, it's best to do it after the new moon, full moon to new moon.
Okay,
When the moon disappears, that means you can eat more. You are putting weight on or less.
Again, you see, that is new knowledge, no? You got no new knowledge. But of course, if you tell this to 100,000 people, what Fiona just said, based on moon, lunar eclipses, to a logical mind, based on the equation of your output must be more than your input, it will immediately what will it start to do? It will start to reject. But if she starts to expand on it, she starts to say, because of these lunar differences, what it actually does to your entire body is increasing your metabolism rate. Then now the mind starts to accept that idea, because now you start saying, if of course my metabolism rate increases because of these lunar changes, then it fits the concept that I will expend more out than what I put in. So the same thing over here in terms of the trading. The whole concept here of the parameters that we choose to filter is what? That some kind, minor confirmation, all it means is what? The concept is some kind of buying pressure must come into the market. Some kind of buying pressure must come into the market. Be asking how much buying pressure? That's what we say. First sign of buying pressure.
Okay, I have a question now. So once we got this buyer bar, after a couple of seller bar, and then you close below, 20 EMA, and we've got a buy bar.
Yeah.
So why do we enter it live, not putting an order on the top of the bar?
Yeah,
It's
good.
safer.
So you come back into the concept again, no? First sign of buying pressure must come into the market, minor confirmation.
Yeah.
Once you're convinced that that sign of close is already signaling buying pressure coming to the market,
Yeah.
why must wait for the high to be taken out?
So it's like 10, 15 pips. So would we be safer to enter an order?
Say that again?
I think we'll be safe, not safer, a bit more. It give more conviction
Hmm.
if we all place an order or to enter live.
To enter on the high or on the close, you mean, yeah?
Yeah.
You're saying you'll give you more conviction to enter on the high, is it?
Yes, to place an order there.
Yeah. Is the word conviction or is the word actually more confidence?
More confident and more safe.
That's right.
So which one is better?
But then you must question what is safe, what is not safe, no?
Yeah.
Safe based on what? Again, must be based on results, no?
Because
So based on concept as well.
Because sometimes if market does that, there's a small buyer bar. Normally the next day, sometimes we'll cover the very long seller.
Very good point. Yeah, but how many times you need to know?
Yeah, how many?
Yeah, the word, all these words sometimes don't point, right?
Okay.
Cumulatively, we need to know how much.
How much time do you need to do that? That's right.
Because when Stephanie testing, right, you've seen all this before live in front of you now, no?
Yeah.
Yeah, all these cumulative losses, and then we put some extra parameters, and we start thinking, but based on concept.
Yeah.
And then we start and seeing how the results will improve. The concepts will never go will fail. Right? If you keep on going on concepts, you can reduce the parameters and permutation you need to test.
I really like that because it really enlightened all we have been doing.
Yeah, exactly. Yeah. Even the lift off, there's a concept behind it. The whole concept behind lift off is what? What is it?
Waiting for
Major
retracement. Don't buy too expensive. Wait for it to be cheap before you buy.
and
Major
major
confirmation.
confirmation.
No. What's the main concept? Major, listen, think about all the major confirmation, all these words, all those technical terms. What is the practical use? What did I tell in a coaching call with you? Practically, everybody is here to make what?
Money.
Money, that's right, right. Because that's how the economic system is done. Everybody is making money. It's not because everybody is moving its prices, oh, I need the close below now, so let's move it. No, come on, nobody's caring about that. The reason why it's doing what it's doing is because people are making money, and that's why it's going there. But why is it going below the moving average? Why?
It's more sellers. Why is closing
Think about
below?
it practically now. Don't think about it as a technical trader. Rule number one of market dynamics is what? Everything that you do in the market is nothing exclusive to what you do in the outside world. This whole psychology of how you bought this ball or how you bought this laptop is the same thing that makes this price move in the market. This concept must become very strong within you. Then only you can choose your parameters really fast and your conviction can go down. But it takes time. Just keep thinking.
Then we have to pay attention to the syntax factors.
You can as long as it fits in with the concept. And then your results will tell you guys what you should build information. I know some traders who do seasonal, and there's a reason for that as well. Comes down to make it final. Right? The concept of the whole lift up, what is it? Anybody knows or no?
Lift up. We're waiting for a better price, isn't it? So if the market's gone up, so once it's got like 50%.
Which strategy doesn't wait for a better price?
Which strategy doesn't?
Wait for a better price.
It's a good question.
Buy low, sell.
Which strategy isn't that then?
Okay. So we for instance, if
Every strategy will have a concept. Based on that, then you put your parameters to make that money for that strategy. That's all they're doing.
so this is a concept like an example.
Is it
No, you see, what's the reasoning behind it?
Okay, so for instance, if the price is gone up for this price of this has gone up and then the price has gone down 50%, So we waiting for lot of buy. For example, if this price of this is £100, and tomorrow it's gone down 50%. So what's going to happen? There's be a lot of buyers coming in the market.
Why? Why must buyers?
Because it's cheap. It's a cheap price.
But who decides the cheap?
Because the price was previously 100, but now it's 50%.
So previously price is 100, right?
Yeah.
Here at the high of this bar, no.
Yes.
Now it's how much?
50.
50. So over here, no 50.
Yes.
No, this one.
So now is
It should basically here, right? That's when people start to decide.
okay.
Who decides it's going to be cheap there?
Buyers.
Demand and supply.
Market. So
So like people like us or like investors.
Buyers.
Is it
They will
you?
be thinking, okay, the price gone down.
is it you or who's it? Or is it investors? What is it? Think about this really. Have you ever thought about it?
It could be the bank, could be the companies buying.
The big people.
Yes.
The big people. Now you're starting to say big people. Why? Why not people like you and me? Why is that?
They have
But
more buying power, they got more money.
They got more buying power.
Yeah.
They got more buying power, more money, and therefore
They can move them on.
Central
So
banks,
it's buying
central
it.
banks will make sure.
But this
that
moving the
they-
market only doesn't make practical sense to you. Okay, now let me ask you one thing. Do you all go to Waitrose now? Waitrose,
Yeah.
or Sainsbury's, you all go, right? Yeah? So, name me one product that you're usually buying from Sainsbury's or what is it? Milk, right?
I don't think I know the price.
I don't think milk, sorry. Can you give me another product that you're buying?
Orange.
Orange, okay, yeah. That's good. So let's say you buy orange, now you go to the cashier, yeah? And then let's say the orange says, what's the price? £2, yeah? This is £2. Can you go argue with her and say, give it to me for 150? Can you call up the Sainsbury's owner? First of all, it's very hard to get his number, but if you can get a hold of his number and then you say, I want to buy it for 150, will he change it for you?
No.
He won't change it. Why though? Who then decides that it's £2?
I think it's when there's a lot of people buying.
Is it lot?
Well, it's the Sainsbury's price analyst based on
Oh.
he consider the market will pay for it.
Let me ask you a let me ask you a more simpler question. Who makes the rules in the country? Is it you?
The government.
Government. Who? And who? And therefore, since they're part of the government, what do they have that you don't have?
Power.
Power. Right? And in different organizations, different guys will have
Different kind.
power. In a company, in a multinational company, in Apple, do the guy working at Regent Street have got the say to change the MacBook Pro price, or the CEO at the top got the say to change the MacBook Pro price? Who?
CEO.
Over there, he's got the power. Different scenarios, different guys, but the power is got by through what? Either by authority or the profession, or either by capital power. The money, the largest amount of money that you have, you can control. In the market, it is influenced, of course, by the same two things again, which is the same throughout the entire world. That's why market will dynamic number one is what? Nothing that you do in the trading world is exclusive to what you do in the outside world. It's all the same. So again, the guys who influence the price, they must stop there. It doesn't go even 1 penny lesser than that. Just like the oranges that you buy in Sainsbury's, you cannot buy even 1 penny lesser than that. 1.99 you cannot, because it's written there £2, right? Huh? You don't even have a single thought even of going and negotiating it, right? Yeah? Because why? Because the guys who have done that have got authority and they got power. And the power is then brought about by mainly, one of the main factors is highest amount of capital power and the vocational power. So again, the same thing, the market especially, it's high capital power. The guy with the highest money, you cannot go against him. Just like in the supermarkets, just like in the properties, just like in any field. You want to buy something, if the guy has got more money than you, even in the auction room, if the guy bids more than you, he's got more money than you, you've got no chance. So the same thing here. So for the big guys, I say I've got lots and lots of cash. And it's always a win-win where everyone can make cash. That's how this whole game goes. And anywhere that you go, right? The CEO in Apple can't make the biggest amount of money if only one guy buys MacBook Pro, am I right?
Yeah.
He needs mass volume buying and he needs to decide the right price. He's got authoritative power as well as he needs to use the authoritative power so correctly that a large amount of population is convinced by that and also buys it so that his company value also goes up. The same thing over here. Then a large amount of guys prices, I must buy, therefore I need a lot of volume to buy it. If I want to buy now 100,000 oranges, I need lots of volume power, right? I need 200,000 pounds at least, right? And that not many people can do. So once I buy all that, but think about it. This is what the same question I asked Stephanie the last time, you know? If one guy comes up and says, I want to buy it for 190, the orange, let's say the wholesaler, and another guy comes in, he says, I want to buy 1 million oranges at 195, you as a distributor, who will you sell it to?
At the price.
The guy with the more volume, no, actually it should be the other way around.
Yeah.
So basically, exactly. Basically, the guy comes and says, I want to buy 1 million oranges at 190, and then there's another guy who says, I only want to buy 1 orange at 195. Who would you feel?
190.
190. Even though you bought it at 180, you can make more on the second scenario, 15 pence more, but only 1 orange will be sold. But in the other scenario, the guy is buying for you cheaper, but big volume. You make more. You are happy because a distributor, and he is happy to buy that because he knows that the consumers will buy it as well from him at that price. So everybody now is winning. So the price moves to where? Not the higher price or cheaper price, wherever there's high capital power commanding it. Because then both parties will get happy. No. It's volume, it always follows volume. Always follows the place where the highest amount of cash can be made. That's psychology, that concept stands true, anything that you put it across. Markets or the outside world. That's why again rule number 1, market dynamics.
So the market must be at some point crazy because the central banks, their power is to keep the level.
Yeah.
But the capital powers, maybe their aim is to mess up with those levels to make money.
Yeah.
And we are in the middle, looking for first buying pressure.
Exactly.
We don't care who plays.
That's
Let's just go to our results.
But you see, it's not that we're not caring who plays, because at the end of the day, we have no other choice but to follow them anyway, of course.
Yes.
But what we're doing is, we're using some statistical basis to track when they're getting in. That's all you're doing. So that's why you're doing all this filter and all these parameters. At the end of the day, you're coming down to where they are getting in. Because when you can get in where they get in, you got a higher chance of winning. And you also got to exit as soon as possible.
Yes, in the analogy, if that guy is going to buy so many oranges, and you can say, oh, you're going to buy 1,000, would you mind to buy 1,001?
Yeah.
And then that's mine. If I jump in the same boat.
Exactly, spot on. Yeah, that's right, spot on. Yeah, that's what you're doing. So you're building a conviction basically in finding those guys. So then the lift off based on that, or concept that I taught you, what is it based on? It's based on basically what it is, so that we don't delay time. Basically based on a big guy with lots of volume of power coming into the market. And let's say currently the price is, of course, any guy with large amounts of cash also won't like to buy so expensive. He likes a bargain. So he looks for buyers he looks for sellers in the market, no? And the easiest place to find sellers is where the sell stop is. And where do usually traders put their sell stop? Behind the moving average. There you go. So that's how the lift off was formed. So let it dip through, take out the stop loss.
Where did it put the sell stop? Sell stop.
Just like what you say, below the 20 moving average, right?
Or below the stop loss?
Yeah.
Okay.
Stop loss.
Stop loss. That's
But stop loss means sell stop what?
Yeah.
Sell stop means sellers what?
Yes.
So the guy with lots of cash comes into the market and sees where can I buy that cheap, and then I can then later drive the market up, and then I can then sell it for a higher price. So that's how the lift off was then formed. So basically, I am waiting for the big guys to get rid of all those stocks beneath that, then wait for some kind of buying pressure to signal that those guys have come in, right?
So it
and
depends.
then
It all-
get in the
it
market.
all depends on what sort of time frames. Different time frames.
That's a good question because for a long time in my trading career, I was also bewildered by these time frames. So like everyone else, I got into a well and I started thinking that time frame is cool. Yet again, of course, without good knowledge, we start following like a sheep. We don't understand what these time frames really mean. Let me ask you one thing. Regardless of what time frame you look at, is the price still the same?
Yes.
So what should we be really looking at? It's the
Variables.
price. The price doesn't change. Then the next question then comes down to then why do we then look at different time frames? That's how the questioning should get deeper. Not just follow, just anyhow blindly saying, oh, different, oh, maybe that will help. No, start thinking, start getting all this loop. And also not all this. I also used to have a lot of broad thinkings as well, like frame thinkings because of society and the trading world. Is that, after a certain while, then you start thinking, oh man, indicators don't make money, man. Or in the beginning, you start to think that indicators make money. So you put a lot of indicators there, no?
That's true.
Yeah? You put a lot of indicators. Now, after a while, that account doesn't go up, right? Because that's the amazing thing about trading, isn't it? It's black and white. You either make or you don't. No such whip and waff, like, oh yeah, it's alright, or is this making money or is it a loss? That's it. How much do you start with? How much is it now? It's so easy, right? So you put all those indicators, still not making money. Account balance not going up. Then what you remove all those indicators from the charts. I can't be bothered about indicators. Anybody who talks about indicators, I'm not going to listen to them, I'm going to run away. Then you start that new method. Again, what happens? Still account balance not going up. It's too stagnant. Then anybody starts talking about indicators, no, I don't like indicators. But did we all ever start thinking, what is this indicator? What does it do? Is it beneficial? What kind of concept does it build onto? First of all, simply, do we even know what moves the price or not? Simple fundamentals that is governing every single buying decision that you are doing in everyday life. It's the same thing that moves the market. You must first understand that and totally integrate that into your own body. Yeah, that's when you can build trading systems and you can trade them with conviction as well. Concept must become strong. But general concept is buying pressure must come into market and then we do different kinds of concepts. In the lift off, simple, the stop loss needs to get out and then we need some confirmation and momentum coming into the market. Also start researching into what is momentum means. You all know what does momentum mean? Momentum means what?
Like book movement.
Hmm?
Big movement.
Question yourself, what do you mean by big? Big means what? 1 big move? 100 big moves? 1,000 big move? You must start to question. You cannot just say all these vague terms. I can tell you one thing, continue using vague terms, that account balance is not going to go up. Black and white. Start quantifying it. You get more conviction, you get consistency as well.
And I guess if you know one currency by heart,
Good point.
then you know the momentum is of that currency.
But what is
Of
momentum?
course, momentum is huge changes in huge changes in a short period of time, normally in a 10, like 10.
See, there's a lot of parameters there, isn't it? Huge.
Like
What does-
music,
First of all, huge. What does huge mean? How much is huge? 50 pips?
you need to know.
Time. How much time?
You need to know.
Does anybody know what's the definition of momentum? Okay, that's your homework for next lesson. Go on the Google, start talking to others. Find out what is the definition of momentum. It has been quantified, huh? No whiffy-waffy like huge amount of move and all that, okay? This finally, all these bits and pieces of all this knowledge finally will build your trading knowledge and build your conviction and start making you see the bigger picture. Okay.
Like a frame.
That's the zone. It's the final stage. Right, so I gave you the 4 types. You need to lift off early entry and test it. There's journals then. We don't have time to go to journals. In terms of routine, simply what do I do? I have a routine where I tested different models. Okay, I tested models where I say 8 o'clock I've got to do my end of day trading. That didn't work because over time I found that every single day was a bit different. Sometimes I got meetings which I cannot push around in the evenings. Sometimes like this, sometimes it drags along. You know, some enthusiastic clients keep me here much longer, so I couldn't get back on time to 8. So then I thought that model is not working, but how can I still build a bit of consistency? So all I said is, before the end of the day, basically before midnight, right, or before I go to bed, I'm going to look at the charts, and I'm going to analyze it, place my trades before I go to bed. That's all.
What time you go to bed?
Oh, you did
Before the end of the day.
exactly.
Sometimes it's still
You end up in the Asian market.
Yeah. But so for me, that's the only way that I could. But ideally, I want to place the trade by midnight. That's the best. But some days, of course, it's inevitable. And this is why, to build more consistency, now I need to train more other traders as well so that they can help me place the trades if I'm not there.
What about
So that's
intraday?
it, yeah. Intraday, I used to do intraday before, but remember intraday, any type of trading you do, you need to have consistency, no?
Yes.
Right now, because of this training business, as I explained before, it's very tough for me to have consistency in intraday. So I stopped that about 2 years ago. I stopped intraday. Right. But of course, I still got a lot of strategy, so if you're going to go trade them, I can teach you that anyway.
But you do it at 7 o'clock in the morning?
I used to do it at 6 o'clock. I used to wake up at 6. I'll get ready for about 6:45 in the market. And then I will trade the market for 3 hours from 7 to 10.
Yeah.
Yeah. The emotions are much more faster. Sabine knows we're talking about this just now.
Yeah.
Yeah, it's really, really hard to master psychology. Yeah. And you need to get a lot of things in place before you can get that.
Question, do you make more money?
Um,
Not necessarily.
Not necessarily. It depends on the system that you have.
By comparison, will you get the
Generally, if you have a good system, technically you should, but it wouldn't make much of a difference. And at the end of the day, if you really look at it, institutional traders, if you want to trade big amounts, you're only looking at about 30 to 40% return from you anyway. Right?
The best to do is for me, to swing trade the end of the day. That's the best thing for me. That's the best. That's what I do.
Swing traders, different types as well. The best of swing traders are the ones who enter intraday within the market and then they hold on to it.
Yeah.
So they go in the shorter time frames and they wait during the day to see some kind of volume pressure, buying pressure coming in, and they enter.
I suppose depending on your picture, because you want to be working 9 to 5, doing our work,
That's
9 to
right.
5 doing this, which is the difference.
In the beginning, it's always, just build consistency first. Keep it very simple, learn the basics, get the consistency up, and then your understanding of the markets, you keep attending all these kind of classes, keep reading, the market gets better, then your conviction starts to increase, then you can test different concepts, you got your statistical conviction, then you can also then expand the hours, or you can just keep it the same, but you just really focus on that, get it really perfect, and then expand your profits. Just like Elder has said in Trading for a Living, what did he say? The 3 things that you need to do as a trader. What is it? You probably guys won't know, but maybe the sons definitely. I've told this before. In Trading for a Living, Elder talks about 3 concepts. What is it? When you get into trading, there's 3 ideas that you must believe in. What is that? First, I'll give you the first one. Maybe you'll remember. The first one is you are in trading for the long term.
Yeah.
What's the second one?
Second one is trading is a journey.
You're here for the long term. Is the first one. Second one.
Prepare to lose money.
So the first one is you're here for the long term. Second thing is you focus on is making just small profits. That's all. Consistent small profits. Even if it's 1% a year, you don't care. But you know that throughout the year you have your trader consistently. Every single trade, no matter whether it's 5 ticks away from the target or not, you just keep trading the stop loss beyond 20 EMA. Can you master your emotions or not? Can you execute your plan? Can you be consistent? Can you be disciplined?
That's true.
So that's the second one. Consistency, but small profits. That's the second target you get to. Then the third one, you go to maximizing those profits. Yeah? But mostly what happens is maximizing.
But you need to master the first and the second one.
Exactly, yeah. Firstly, you're here for the long term.
Long term.
Yeah?
Yeah.
You're not here for one trade, two trade, not here for making money last week, 2 weeks, this trade. What's the point? You can't feed yourself, you can't feed your family. Right? In the long run. Yeah? Here for the long term. Second thing is consistently execute a system just to get small profits. That's all. Small profits. You only care about that. But what happens because of all the conditioning that we have? Start getting impatient, start getting greedy, start getting fearful. It's going to retreat. It's going to go more. Achieve my target. Too many losses. I can't bother. Stop trading.
Yeah.
Right? No, isn't it? Even in the live trading room, it's the same. If you look back at the results, I mean, this year is going to be the toughest year. And you see that in 3 months in a row, we were losing, right? And a lot of clients will get fearful. Hey, can't take it, no? Right? Can't be bothered. Right? And I had in these sessions, and one of them were telling me, oh yeah, but I'm losing my money in my pocket, right? What happened then? But then you see, in the 5th, 6th month, now the equity curve's back to new highs again, right? 5-4% profit, isn't it? You're taking all the trades as well.
I take the lift off.
Yeah. So there you go, right? But those guys by the time already build up, okay, because cannot master the second one. Because the focus is just not consistent. It's really small. Pull through it is the toughest. But if you pull through it, you've gone to another level of trading. Yeah? It's the same thing in anything that you do in your life. How many times you told yourself, especially New Year, and New Year comes, it's going to come as a New Year, it's going to come very soon, two months, right? A lot of people make New Year resolutions. This year I'm going to stop smoking. This year I'm going to stop eating junk food. This year I'm going to get consistent. Right? Yeah? This year I'm going to stop waking up every day at 7 a.m. going to the gym. Then only happens for the first week. Then after what happens? Start going back into nonsensical patterns, isn't it? But you can master that, sustain through everything that happens, and still keep doing the same thing again and again. That is why he said the second step is master the consistency. You don't care what happens, it's just small performance. Then the third one, you go to optimizing the performance. So remember those 3 things? I talked about that. So that's the routine in terms of the rules and what I usually do. And variation 5, we'll go to another session. Placing a trade, you can book a session with us. Come in, sit down with us. Sabrina, you can maybe help us as well. Placing a trade. If you can book a session.
Open the account. No, you haven't opened your trading account.
I did, but they cancelled it because it's expired the demo.
Oh, you can just log in again and just
Just
get a
like
new one. And you know what to do then, right? You just
If you have your account already, so we can.
she's got the software. You got the software, right?
Yes, I do have.
So you just go on the file, you just go on the login again. He will give you a new account straight. You don't need to call.
You want a demo? Trade, yeah.
Yeah, understand.
So you can just show her how to place a trade one day. So you can call me. Any last questions you all have?
I have a question.
Yes.
It's not in the topic.
Of course.
You know when we trade the market, we use a broker.
Yeah.
Can we trade directly without using a broker? Is that possible?
Direct market access.
No, direct market. We use even direct market. We use a broker.
So you want to find a buyer yourself.
Yeah,
So basically you're saying you don't use a real estate agent.
yeah, but I don't want to use a broker. I just want to do it myself.
Unless you go work on the trading pit itself. But usually nowadays, because of how the market is involved, it's all electronic now. It's very tough. Unless you work on the pit, then you are the broker itself who are matching the buyer and seller. You're talking to both the buyer and seller. But that is at the highest level, which is at the New York Stock Exchange. You know the guys who are doing all this hand signals?
Yeah.
So those would probably be the guys who will be doing the direct ones.
How much
But you can.
How much capital?
But will it be cheaper for me or will it be expensive if I want to do a direct without using the
Usually, the direct guys who work with you direct, you won't be able to do that in today's situation because it all goes through brokers nowadays. You know, you won't be able to do a direct transaction. You won't be able to see the buyers. You won't be able to do it direct, but you can go up to as much as direct level per brokers. There's very little gap. Basically, there's only one gap between you and the buyer. Usually, the brokers that you trade in the commercial world, there's a lot of layers. Basically, the broker that you're trading is actually under another broker, and that broker is under another broker, and that broker is under another broker. Right? So, if you really want to get to the top, the furthest you can get to is where you're just trading between the broker, and that broker is the only one in between you and the buyer. But to trade that kind, you're talking about 100, 500 million. Of course, because why would the guys entertain such big things? Anything else?
Not today, but many questions.
Yes.
I have registered to attend your thing.
Traders Open Day?
Yes.
Oh, okay, yeah. Traders Open Day, everybody registered already? 25th of October.
Yes, I have a question, can I bring a friend?
Of course you can. We love for you to bring a friend.
What sort of friend?
So have you clicked on link?
No, I will.
Okay, do it.
I did, I registered mine already, but can I register?
Of course, yeah. Put your friends' names and everything,
I have
and the
got
details, and then be good. Because then only the system can release the ticket, basically. So just get your friend's number and email. I'll get suggesting to follow up if you can help you.
friends. Only one friend.
You can bring as many as you want. Bring 10 friends. Good. Have a celebration of fun.
Bring one with everyone has to
Are you coming with us? Bring your friend?
No.
Come, bring a friend. Make him more happier.
Well, bring your friends that is likely to, interested in trading. It's not better to bring a friend that to come and watch you. But the friends, they will show interest in the same wavelength. You understand?
Some people get interested. The whole Traders Open Day is a concept of University Open Day. Some people don't know they want to get to university, so they want to come and see what it's all about.
Yes.
Some people already know they want to get to university, but they just want to see if it's exactly the right thing they're going for. And the other guys are usually intermediate traders, or postgraduates, where they're looking to do some postgraduate degrees like masters or PhD. So for intermediate traders as well. So Traders Open Day will cater to everyone. Because we've got 4 different kinds of speakers coming. So there's speakers on equities, futures. Oh yeah, that's the. You can show it to them. Not the pages.
Okay.
You can show them a bit of it.
What's the name?
That's the Traders Open Day website. Have you seen it?
Oh,
Have you all seen it? No.
yours.
Oh yeah, it's Traders Open Day website. You should
Yeah,
click on the link. You see, that's the one.
Yeah, I saw the video.
Oh, yeah, you saw
But
it.
I saw Vanessa. Oh yeah, I saw Vanessa. I did.
Oops.
The next step is go to properties. So we are waiting for the next class of the market. The plan, the UK is the only
Cash
economy
just
growing.
isn't giving me a good return. Where else should I invest?
Have you seen this, Mr. Sun? Oh, right.
Knowledge of different markets is limited. How do I expand?
Doesn't it work?
Oh, there is at the end, yes.
Lots of markets and traders open day.
You can't do
Have
that.
you ever had discussions and found yourself stuck?
Go to YouTube then, you can go to increase it from there.
And people register from there.
Oh, yeah.
My name is Rishi Patel, co-founder of Master the Markets and the Traders Open Day. In this video, we're going to show you a way out.
Oh, you like the. Yeah. Oh, you haven't seen this already?
So, Sarah and Rishi.
I've met that.
Oh, Wednesday, yeah.
Pony Express in Saturday.
Ah.
I'm so tired of working all these long hours. How can I get out of this?
My cash just isn't giving me a good return. Where else should I invest? My knowledge of different markets is limited. How do I expand it? Hi, I'm Dylan Wan, founder of Master Markets and Traders Open Day. Have you ever had discussions and found yourself stuck? And my name is Rishi Patel, co-founder of Master Markets and the Traders Open Day. In this video, we're going to show you a way out.
So, Sarah and Rishi, we heard that you may have the answers to our issues, and that's why we're here. So tell us, Why is it that so many people end up where we are?
Well, it all comes down to financial illiteracy, which costs the UK millions per year. It increases your risk of unemployment and strains your income. Debt makes you work more and have less free time, and it can affect your retirement plan, savings, and your family's future.
So guys, the bank's only giving me 0.5% interest rate, which is so low. My property investment's giving me a fair return. So how else can I diversify my portfolio?
Educating yourself with financial trading is a good start. You can make money in the markets even when they're falling during a recession. You can then reinvest this in property. In this way, your money works harder for you and increases your returns.
So what about 9-to-5 workers like myself? What's the way out?
The cycle of working more to earn more is the time and money link. Now, to break the link, you need to learn about how to earn a passive cash flow and free your time. Financial trading is one way. For traders to gain consistent profits, mastering the psychology is critical as it makes up 80% of trading. And learning about the other markets can help them diversify their trading portfolio.
So, out of interest, where do you think is the best place to find out more about financial trading?
I'm glad you asked. Traders Open Day is the perfect opportunity. At the event, you will get to hear and learn from 4 expert speakers. They'll be speaking on Forex, equities, commodities, and trading psychology. This will expand your trading knowledge and help you to increase your returns. 2, learn how to earn a passive cash flow through 15 minutes of trading with low risk to gain your profits safely and securely and free your time. Meet like-minded individuals to form support networks through fun activities on the day and propel yourself to live a life of freedom, joy, and fulfillment.
So how can we register for Traders Open Day?
All you have to do now is click on the register button and claim your ID. And also to get from us, when you register, you will get our Trader Smart Pack for totally free. And also get speakers content and their bonus materials.
It's over to you now to take action and start trading like a master. We look forward to welcoming you at the Traders Open Day.
So that's the yoga register. That's good. Awesome. And I think the last thing before you go, I think I did mention about Brian Tracy, so he's coming to London. I don't know how many of you know Brian Tracy?
Yes.
Most of you know Brian?
I saw the advert.
Yeah? Yeah, so he's here on the 15th of November. So Brian is going to be here, Brian Tracy. So I spoke to the guys who are doing it because I told him we got like good number of their good number of clients.
Success resources.
No, high achievers academy.
Okay, good. I don't know.
Yeah.
Resources.
We don't want to do business with This was good. It's a big event.
This is the new one.
Yeah,
This
so,
one.
so it's called the MBA. It's a one-day thing. It's mainly it's on business and psychology and all that. So if you got your own research, he's a phenomenal speaker, he's an incredible speaker. So the ticket price, what they're putting is 347 at the moment. That you can see publicly. So just wait a minute before I tell you. Just stop the recording. Session is over. So what they are having
Okay, we need later.